So let us try to understand now question number 11, which is relating to sampling risk and how this sampling risk is going to have an impact on audit. Important question, guys. Very interesting and very conceptual also. Listen carefully. So what exactly is sampling risk? What exactly is sampling risk? Let us try to understand it. See, as we all know, what do you mean by sampling? First of all, assume that there is an entire population. There is an entire population. So this is an entire population which is containing different transactions. Entire population of transactions. From this entire population of transactions, I have selected a sample. So this is my entire population. Out of this entire population, I have selected a sample. When I have selected the sample, on what I will perform audit procedures? I will perform audit procedures only on my sample. On the sample, whatever I have selected, on that sample only I will perform audit procedures. Now, do you think when the auditor verifies the transactions on sampling basis, will there be any risk which auditor is facing here? If you are an auditor and if you verify the transactions on sampling basis, do you find any risk here? Step into the shoes of the auditor. Imagine yourself as an auditor. You are auditor. So total 10,000 transactions are there. Out of that, you have selected a sample of 500 transactions. You will perform audit procedures only on the sample of 500 transactions. By doing it, are you taking any risk? Obviously. What risk you are taking? See, you are verifying 500 transactions. Okay. After you have performed audit procedures on the 500 transactions, you did not find out any material misstatement. You are unable to find out any material misstatement. See, when you are unable to find out any material misstatement, what you will do? You will give unmodified opinion. You have given what? Unmodified opinion. But when I say out of 10,000 transactions, you have verified 500 transactions only, balance 9,500 transactions you did not verify. This is the other side of the sample. You are telling, sir, out of 10,000 transactions, I have verified a sample of 500. That means you are indirectly trying to tell me I did not verify 9,500 transactions. In these 9,500 transactions which you did not verify, there could be fraud also. There could be an error also. There could be some non-compliances with the laws and regulations also. There could be some deviations also. Now, if you did not verify that 9,500 transactions, will you be able to identify any of this? No. So, if you are unable to identify, and if at all there exists a fraud, error, etc. in this 9,500 transactions, then whatever opinion that you have given, do you think that opinion will be correct? Definitely not. Do you think there is a chance of your opinion going wrong? Yes. If your opinion goes wrong, are you required to prove yourself? Yes. That itself is a risk. That itself is the biggest risk for the auditor. The risk of auditor's opinion going wrong. That is the biggest risk for the auditor. And if you see here, this risk is arising purely because I am verifying the transactions on sampling basis. So I verified the transactions on sampling basis. I have selected a sample, performed the audit procedures on that sample, but in my sample, misstatements, errors, frauds might get covered, might not get covered. Whatever transactions which I am leaving from my sample, in those transactions there could be a fraud, error, misstatement which I will never be able to identify. This risk itself we are going to specifically call it as sampling risk. What do we call that risk as? Sampling risk. Risk arising because of sample. In simple terms, if I have to put it, what is sampling risk? Risk which is arising out of sampling. So since you are verifying transactions on sampling basis, you are ignoring so many items without verification. In those items, a fraud also could be there, error also could be there, misstatement also could be there. So that risk we call it as sampling risk. If I put it in simple terms, if I have to say it in simple terms, sampling risk means risk of selecting an inappropriate sample. Risk of selecting an inappropriate sample. That means you are not able to select an appropriate sample. You are selecting an inappropriate sample. That means you are selecting the sample in such a way that in that sample, frauds, errors, etc. are not getting covered, because of which your opinion can go wrong. So this risk we are going to call it as what? Sampling risk. In simple terms, risk of selecting an inappropriate sample. If you have selected an inappropriate sample, obviously that will lead to inappropriate conclusions which will have an impact on your auditor's opinion. So that risk we are going to call it as sampling risk. This is what the simple meaning, risk of selecting inappropriate sample. But as we all know, standards doesn't like easy definitions. Standards doesn't like easy definitions. They have given one complex definition for sampling risk. But I can assure you one thing, even after we put an effort to understand that complex definition, even we will automatically come to this conclusion only. Even after analyzing the entire definition, whatever they have given in the standard, still by the end of the day, you will say, so that is nothing but simply selecting an inappropriate sample only. No. But as I have told, standards doesn't simplify anything. First, they try to overcomplicate it. Then once again, we have to simplify. First, a simple thing will be there that they will try to overcomplicate. Now, we professionals are all reading that to once again simplify it. Simple thing has been complicated. Our job is to once again simplify complicated thing into simple things. That's how professionals work. Okay, so let us see how they have defined the term sampling risk. Sampling risk is the risk that the auditor's conclusion based on a sample may be different from the conclusion if the entire population were subjected to the same audit procedure. What they are trying to say? Sampling risk is the risk that auditor's conclusion, whatever conclusion that you have formed based on performing audit procedures on a sample, that conclusions will be different if you perform the same audit procedures on the entire population. That risk we call it as sampling risk. Sir, what they are trying to say here, once again, let me try to explain it with the help of example. So assume that a population, entire population. Out of that entire population, I have selected one small sample. So total population contains 10,000 transactions. In my sample, I have taken 500 transactions. I performed some audit procedures on my sample. I am unable to find out any material misstatement. On the other hand, if I would have performed audit procedures on the entire population, I might have concluded that there is a material misstatement in the financial statements. So by performing audit procedures on the sample, I got some conclusion. If I perform same audit procedures on the entire population, my conclusion would have been different. This risk only we call it as sampling risk. Nothing but this is what I have told, risk of selecting an inappropriate sample. That means on the basis of sample, you are forming wrong conclusions. You performed audit procedures on the sample and you concluded that there is no material misstatement. If you would have performed the same audit procedures on the entire population, your conclusion would have been different. Whatever audit procedures you have performed on the sample, if you would have performed that same audit procedures on the entire population, you might have concluded that there is a material misstatement. So sampling risk is the risk that whatever conclusions auditor has drawn on the basis of sample would be different and the entire population has been subjected to same audit procedures. That we call it as sampling risk. This only in the simple terms I have mentioned it as risk of selecting an inappropriate sample. So when you select inappropriate sample, then only your conclusions will be wrong. Understood? So this is what we call it as sampling risk. So come on guys, repeat everybody. Definition very, very important. So what is sampling risk? Sampling risk is the risk that the auditor's conclusion based on a sample may be different from the conclusions if the entire population were subjected to same audit procedure. This risk will always be in existence when auditor uses sampling technique in conducting his audit. See, any technique you follow simple random sampling, you follow stratified random sampling, you follow interval sampling, you follow any sampling method. Whenever you are using sampling, there will always be the sampling risk. You can't completely avoid it. The moment you are using sampling, definitely there will be sampling risk. So we understood sampling risk. Now let us try to understand how this sampling risk is going to have an impact on test of controls and test of details. Nothing but this sampling risk is going to have an impact on compliance procedures also. This sampling risk is going to have an impact on substantive audit procedures also. So let us try to understand how this sampling risk is going to have an impact on test of controls as well as test of details. First of all, we will try to understand how the sampling risk is going to have an impact on test of controls. Guys, what do you mean by test of controls? What is the other name for test of controls? As we all know, the other name for test of controls is compliance procedures. What actually happens in the compliance procedures? Why do we do compliance procedures? So we actually perform compliance procedures to obtain audit evidence whether the internal controls are working effectively or not. So basically, when I say test of controls, in the test of controls, we are verifying whether the controls are working effectively or not. So now I'm going to explain you about how the sampling risk is going to have an impact on my test of controls. What do I do in the test of controls? I try to obtain evidence whether internal controls are operating effectively or not. So let us see how it is going to have an impact. So I will try to explain it with the help of example. Guys, please listen carefully. You should have complete focus, complete attention when I'm teaching you this impact of the sampling risk on test of controls, compliance procedures. Very, very important. So what I'm trying to say here, see, assume that there is an entire population of internal controls. This is an entire population of internal controls. There are so many internal controls. So what I have done is, out of that entire population of internal controls, I have taken one small sample. So let me use the drawings here. So I have taken small sample. So what I am trying to say, there is an entire population. This is entire population of internal controls. So many internal controls are there. Since I am unable to do 100% verification, what I have done is, I have taken a small sample of internal controls. What I have done, I have taken a small sample of internal controls. Now, when I have selected a sample, on sample will I perform audit procedures, or on the entire population I will perform audit procedures? I am going to perform my audit procedures on sample. So that's what I have done. I have taken this sample. On this sample, I have performed compliance procedures. And in this sample, I am unable to find any deviation. Whatever sample of internal controls I have taken, all those internal controls are working effective. In my sample of internal controls, I did not find any deviation. I did not find any lapses in the internal controls. So on the basis of my sample, I have concluded that internal controls are effective. What I have concluded? I have concluded that internal controls are effective. Internal controls are working perfectly fine. I did not find any deviation, any lapses in the internal control in my sample. So what decision I will take? I have told you that depending on results of compliance procedures, we are going to plan our nature, timing and extent of substantive audit procedures. Since I came to know internal controls are very effective, what I have done is I have planned to perform less substantive audit procedures. What decision did I take? Since controls are all working effectively, in my sample I did not find any deviation. All the controls are working perfectly fine. So I thought, let me perform less substantive audit procedures here. This is what the decision I have taken. But if I would have performed, actually in the beyond the sample, there are so many other internal controls also. There are actually deviations in the internal controls in some internal controls. But those internal controls did not get covered in my sample. I performed audit procedures on my sample. I came to know all the controls are effective. So what decision I have taken is I will perform less substantive audit procedures. But if you would have performed your audit procedures on the entire population, you would have performed your audit procedures on the entire population, you would have concluded that internal controls are not effective. This is what the decision you would have taken. When if you have performed the compliance procedures on the entire population, you would have actually found that deviations in the internal controls. You would have concluded that internal controls are not effective and you should have taken a decision to perform more substantive audit procedures. You would have taken a decision to perform more substantive audit procedures. See, actually, this is a correct decision. Performing more substantive audit procedures is a correct decision. Why? Because there are lapses in internal control. So you should have taken a decision to perform more substantive audit procedures. But what you have done is, because you have performed audit procedures only on the sample of internal controls, instead of performing more substantive audit procedures, you have taken a wrong decision of performing less substantive audit procedures. What should have been the correct decision? Since there are lapses in the internal control, you should have decided internal controls are not effective, and what you should have done is you should have planned for performing more substantive audit procedures. But since you did not verify entire population, since you verified only sample, on the basis of sample you have concluded that internal controls are effective, but you have planned to perform less substantive audit procedures. But there, what is appropriate decision? To perform more substantive audit procedures. But on the basis of sample, I am taking an inappropriate decision of performing less substantive audit procedures now. So this risk, I am going to call it as risk of over reliance. What do I call this risk as? I am going to call this risk as risk of over reliance. Sir, why, sir? What is the logic behind this name? Let me explain. Please focus, guys. See, when controls are not effective, actually controls are not effective, but on the basis of sample, I am overly relying on internal controls. Actually, controls are not effective. I should not have relied on the controls. But since I performed audit procedures only on my sample, I am overly relying. When controls are not effective, but on the basis of sample, I am concluding that controls are effective. That means you are overly relying on internal controls when you should not. When you should not rely on controls, but because of sampling, you are overly relying on internal controls. That's why this risk, we call it as risk of over reliance. Now, I want to ask you one question. This risk of over reliance, will this have an impact on efficiency of audit, or is it going to have an impact on effectiveness of audit? Very important discussion, guys. Listen carefully. I told risk of over reliance. What is risk of over reliance? When controls are not effective, but inappropriately on the basis of sample you are concluding that controls are effective, and we should have when you should have taken a decision to perform more substantive audit procedures, but on the basis of sample you are taking a decision to perform less substantive audit procedures. This we call it as risk of over reliance. Now my question is this risk of over reliance, will it have an impact on efficiency of audit, or will it have an impact on effectiveness of the audit? First of all, I want you to remember once again what is the difference between efficiency and effectiveness. This I have already explained earlier, but now I will explain once again. This I have already done it earlier. See, most of the people use these terms efficiency and effectiveness interchangeably. They use both the terms, they think both the terms are similar, but actually there is a slight difference. There is a slight difference between the term efficiency and effectiveness. Efficiency means if you are able to do the work effectively. Sorry, efficiency means if you are able to conclude the work in less amount of time. If you are able to complete the work in a short span of time, then I will call you as efficient. On the other hand, effectiveness means if you are doing the work in a perfect manner, then I call you as effective. Efficiency, I call a person or I call some activity as efficient when I can do it in less span of time, with a very less amount of time, within a very short span of time. If I'm completing a task, I will be efficient. On the other hand, if I'm doing the task in a perfect manner, that is what effectiveness. So take for example, if I have conducted one, this is a one layman example which I always use for explaining differences between efficiency and effectiveness. I have conducted an examination, gave you 3 hours of time to write the exam. A student completed the exam in 1 hour only, gave me the answer sheet and went off. I will call him as efficient. But when I look at his answer sheet, it is blunder, mistakes, complete, full of mistakes. He has written the answers. He is not effective, but he is efficient. Completed the task in less time. On the other hand, another student is there. He consumed all the 3 hours. He also taken extra 10 minutes. He is not efficient. He's taking extra time. But when I look at the answer sheet, he has written the perfect answers. I will call him as effective. So that is what the minute, a very thin line of difference between efficiency and effectiveness. Efficiency, if you are able to complete the task in less time. Effectiveness, if you are able to do the task in a perfect way, then you will be called as effective. Now my question here is, because of risk of over reliance, what will be impacted? Will it have an impact on efficiency of audit, or will it have an impact on effectiveness of the audit? So because of risk of over reliance, what will happen is effectiveness will not be there in the audit. You will be efficient. See, when you are required to perform more substantive audit procedures, when you are required to spend more time on substantive audit procedures, you are performing actually less substantive audit procedures. That means you will complete the task in very less amount of time. You are efficient only, but you are not doing the work effectively. When you should have performed more audit procedures, you are performing less. That means your work is not perfect, but you will complete the work in less amount of time. So you will be efficient, but what will happen is your work will not be effective. Your work will not be perfect. Your work will be full of mistakes. So this is, again I will do a recap. Sir, what is risk of over reliance? So I take a sample of internal controls. In that internal controls, I did not find any deviation. I concluded controls are working effectively. So I have taken a decision to perform less substantive audit procedures. But actually, there are deviations. If you would have performed entire audit procedures on the entire population, you should have concluded that internal controls are not effective. You should have performed more substantive audit procedures. That is correct decision. But on the basis of sample, you are concluding that internal controls are effective and you are performing less substantive audit procedures. That means you are overly relying on internal controls because of sample. This risk we call it as risk of over reliance. And when I say risk of over reliance, now I'm asking you the question, risk of over reliance, will it have an impact on efficiency or will it have an impact on effectiveness? Because of risk of over reliance, efficiency will be there. You will complete the work in less time, because when you are supposed to perform more substantive audit procedures, you are performing less. But effectiveness will not be there. Your work will not be perfect. So this is what we call it as risk of over reliance. Now let us try to understand the other way around. So what will be the other way around? Assume that there is a, let me put it this way. There is a entire population of internal control. From this entire population of internal control, you have taken a small sample. So this is the entire population. From this you have taken a sample. See, in the sample which you have taken, on that you have performed audit procedures, compliance procedures you have performed. In that sample only you found a misstatement. In that sample only you found a deviation. You have taken some internal controls. In that sample of internal controls only, one control is not working effectively. Now you thought that, okay, in my sample also, in my sample itself, if there is a lapse in internal control, in my entire population, there will be so many weaknesses in the internal controls. This is what you are imagining. In my sample only, when I look from the sample perspective, from small sample of 10 internal controls only, one internal control is not working. Now, in the entire 100 internal controls, there might be so many weaknesses. That's what you have thought. So, on the basis of sample, what you have done is you have concluded that internal controls are ineffective. Internal controls are ineffective. And you have taken a decision to perform more substantive audit procedures. This decision you have taken. But if you would have performed audit procedures on the entire population, you would have concluded that whatever deviation you have found in the sample, that is the only internal control which is not working. Rest of all the controls are working fine. Actually, when you would have performed audit procedures on the entire population, you would have concluded that there is a deviation, agreed, but that is very small deviation. That is the only deviation in the entire population. That is the only control which is not working. That is not at all material only. But what you have done is, since you have verified the transaction, since you have verified the controls on sampling basis, you imagined that in my sample only, if I find a deviation, in the entire population there will be so many deviations. So you decided controls are not effective. You performed more substantive audit procedures. But if you would have performed compliance procedures on the entire population, you actually would have concluded that there is only one deviation. That is also not material. If you would have performed audit procedures on the entire population, you would have concluded that internal controls are effective only. What you would have concluded? You would have concluded internal controls are effective only. And you would have taken a decision to perform less substantive audit procedures. This is the appropriate decision. If you would have performed compliance procedures on the entire population, you would have concluded that whatever deviation is there, that is very small deviation. Actually, controls are very much effective. You should have performed less substantive audit procedures. But on the basis of sample, you are imagining that audit procedures, which is inappropriate. This risk we call it as risk of, this risk we are going to call it as risk of under reliance. Risk of under reliance. Sir, why the name risk of under reliance? Can somebody let me know? Very simple logic. Why risk of under reliance? Why? Because even though the controls are effective, but on the basis of sample, you are wrongly concluding that controls are not effective. You are not relying controls when in fact they are effective. So that's why we call them as what? Risk of under reliance. You are relying less on the internal controls when in fact you should have relied more. So this is what will happen. So because of risk of under reliance, what we will do is, when less substantive procedures are appropriate, we will perform more substantive audit procedures. Now I will ask you once again the same question. Now, because of risk of under reliance, what will be impacted? Will efficiency be impacted or will effectiveness will be impacted? In case of risk of under reliance, you are performing more procedures than actually required. That means you are doing the work in a perfect way. When less substantive procedures are appropriate, you are performing more substantive audit procedures. That means your work is perfectly fine. But what is the problem is, you are unnecessarily wasting your time. You are performing more procedures when less is required. That means you are taking more time. Efficiency will not be there in your audit. You are unnecessarily spending more time when you should have spent less time. So that's why you are doing the work perfectly here, but your work will not be efficient. Why? Because you are spending more time than required. So this is how sampling risk is going to have an impact on test of controls. Clear, everybody? Able to understand whatever I have explained? Can we have one quick recap once again? So what is the impact of sampling risk on test of controls? Come on guys, tell me, everyone. So risk of over reliance. What is risk of over reliance, sir? There is an entire population of internal control. From that you have taken a sample. On the sample you performed compliance procedures. You did not find any deviation. You decided internal controls are effective. You decided to perform less substantive audit procedures. But if you would have performed compliance procedures on the entire population, you would have found out deviations. That means you would have concluded internal controls are not effective. You should have taken the decision to perform more substantive audit procedures. But because of sampling, you are performing less substantive audit procedures when more is required. You are overly relying on internal controls. This we call it as risk of over reliance. Risk of over reliance, will it have impact on efficiency of audit or will it have an impact on effectiveness of audit? Risk of over reliance is going to have an impact on risk of over reliance is going to have an impact on effectiveness. Why? Because you will not do the work perfectly. You will do the work in less time. You will be efficient, but you will not be effective. Second one, risk of under reliance. Sir, what is risk of under reliance? Risk of under reliance means controls are very effective, but you have selected a sample of internal controls. On that internal control sample, you found out one deviation. You thought that in my sample only, if there is this much deviation, how much deviation will be there in my entire population? So you thought internal controls are ineffective and you decided to perform more substantive audit procedures. But in fact, what is happening is, in the entire population, that is the only deviation in the entire population. So you should have concluded internal controls are effective and you should have performed less substantive audit procedures. But because of doing sampling, you are performing more substantive audit procedures. That means when less is required, you are doing more. This we call it as risk of under reliance. Now, risk of under reliance, where it will have impact? Will it have impact on efficiency of audit or effectiveness of audit? It will have an impact on efficiency. Unnecessarily, you are wasting time. But you will do the work perfectly. More you are doing, no, you will do the work perfectly, but you will use more time than required. So this is how sampling risk is going to have an impact on compliance procedures or test of details. Similarly, with the help of this same kinds of logic, let us try to even understand how the sampling risk is going to have an impact on test of details also. Come on guys, participate. How sampling risk is going to have an impact on test of details. See, in test of controls, we obtain audit evidence whether internal controls are working effectively or not. What we do in the test of details, what we actually try to do in the test of details. In the case of test of details, we try to obtain audit evidence whether accounts, whether the items in the financial statements like expenses are correct or not, whether balance sheet is correct or not. Nothing but basically we try to verify accounting entries. Test of details means what? Checking the items, checking the entries in the books of accounts. Simply, if I put it. So now let us try to understand how the sampling risk is going to have an impact on test of details. Let us try to understand it. Now, this also I will try to explain it with the help of once again an example. Assume that there is an entire population. See, now the population will not contain internal controls. Now the population will contain entries in the books of accounts. Here in the previous case, in the case of test of controls, population contains various controls. But now we are talking about test of details. The population contains various entries in the books of accounts. So there are total 10,000 entries in the books of accounts. But since I'm lacking time, I might not be able to verify all the 10,000 entries. So what I have done is I have taken a small sample. So this is the entire population of transactions. I am unable to verify all the transactions. I have taken the sample. Now on this sample, I performed audit procedures. I did inquiry, inspection, all these things I have done. By performing audit procedures on the sample, I did not find out any material misstatement. On the sample, whatever I have verified, I did not find any material misstatement. No material misstatement I did find out. Since I did not find out any material misstatement in my sampling, I will conclude that in my entire population also there is no misstatement. Since in my sample itself I am unable to find any misstatement, I will also conclude that in my entire population also there is no misstatement. So I have decided there is no material misstatement in the financial statements. If I have decided it, which opinion I will give? Unmodified opinion I have given. Which opinion I have given? I have given unmodified opinion. But if you would have performed audit procedures on the entire population, you would have found some misstatements. There are actually misstatements in the population which did not come into my sample. So if you would have performed audit procedures on the entire population, you would have found out misstatements. So you would have concluded that there are material misstatements. You would have given modified opinion, or you should have given modified opinion. If you would have performed audit procedures on the entire population, you would have found that misstatements which were not covered in the sample, you would have concluded that financial statements contain a material misstatement and you would have given modified opinion. See, this is the appropriate opinion. You should have given modified opinion. But because of verifying the transactions on sampling basis, instead of giving modified opinion, instead of concluding financial statements contain a misstatement, I am concluding financial statements did not contain misstatement, because misstatement I am not able to find in the sample, and I give unmodified opinion, which is inappropriate opinion. So because of sampling, when I should have given modified opinion, I am giving what? Unmodified opinion. This risk we call it as risk of incorrect acceptance. What do we call this risk as? Risk of incorrect acceptance. Sir, what do you mean by risk of why this name risk of incorrect acceptance? Very simple. On the basis of sampling, you are accepting that financial statements are free from material misstatements. Is that acceptance correct or incorrect? Incorrect. On the basis of sample, you are accepting that financial statements are free from material misstatements. You are accepting that fact on the basis of sample. Is that acceptance correct? No. In fact, financial statements are containing material misstatement. But without realizing it, on the basis of sample, you are accepting wrongly that financial statements are free from material misstatements and you are giving unmodified opinion. So that's why we call it risk of incorrect acceptance. You are wrongly accepting that financial statements are free from material misstatements when they are actually containing material misstatements. So that's why when modified opinion is appropriate, you are trying to give unmodified opinion. You tell me, will this lead to audit risk? Yes. Will this lead to audit risk? Yes, this will give a rise to audit risk. Why audit risk, guys? Why? Because when modified opinion is appropriate, we are trying to give unmodified opinion. That is what the definition of audit risk. When modified opinion is appropriate, you are trying to give unmodified opinion. So this risk of incorrect acceptance will lead to audit risk. This will give rise to audit risk. Next, let us have a look at other scenario. Let us have a look at another scenario. Sir, how another scenario? How to look it from the other way around? So assume that there is a entire population. Now once again, this entire population contains various transactions, entries in the books of accounts. What I have done is I have taken one small sample from here. I have taken a small sample from this entire population. Now on this sample, I have performed audit procedures. When I perform audit procedures on the sample, in the sample itself, I found a mistake. In the sample itself, I found a misstatement. I thought that if in my sample only misstatement is there, in the entire population there will be so much bigger misstatement. What I thought, on the basis of sample, if in my sample of entries only I am able to find a misstatement, how many misstatements will be there in the entire population? So I concluded on the basis of sample that financial statements are containing a material misstatement, and I went ahead and gave modified opinion. I have given. This is what I have done. But if you would have performed audit procedures on the entire population, you would have concluded that, boss, whatever misstatement which I found in the sample, no, that is the only misstatement in the entire financial statements. From the sample perspective, that misstatement might look very big. But when I look it from the entire financial statements perspective, that misstatement is very, very small. See, why I have concluded financial statements contain misstatement on the basis of sample. I thought in my sample 1 crore of misstatement is there in Reliance. I thought if in my sample only 1 crore amount of misstatement is there might be 100 crores of misstatement in the entire population. I imagined it. I concluded financial statements contain a material misstatement. I gave a modified opinion. But if you would have verified all the entries in the Reliance, no, you would have concluded that 1 crore is the only misstatement. Your bad luck. Whatever misstatement you found in the sample, that is the only misstatement. Apart from that, there are no material misstatements in the financial statements. So actually, if you would have performed audit procedures on the entire population, you would have concluded that financial statements are not containing material misstatement. There is a misstatement 1 crore, but that is not at all material. There is no material misstatement. You would have given, or you should have given, unmodified opinion. You should have given unmodified opinion. Why? Because misstatement is there, but that is not at all material. You should have given unmodified opinion. But on the basis of sample, you are wrongly giving modified opinion. This risk we are going to call it as risk of incorrect rejection. This risk we are going to call it as what? Risk of incorrect rejection. That means on the basis of sample, you are rejecting the fact. You are rejecting the fact that financial statements are free from material misstatements, when in fact financial statements are really free from misstatements. Financial statements are free from material misstatements, but on the basis of sample, you are rejecting that fact. You are rejecting that, no, financial statements are not free from material misstatements. You are incorrectly rejecting the fact that financial statements are free from material misstatements. So that's why this risk we are going to call it as risk of incorrect rejection. I have one more question for you. Do you think, will the risk of incorrect rejection, will it lead to audit risk? I am giving modified opinion when unmodified is appropriate. Will this lead to audit risk? No, this will not lead to audit risk. Audit risk covers only one scenario. When you are giving unmodified, when modified opinion is appropriate, that only will come under audit risk. If you are giving modified opinion when unmodified is appropriate, that scenario will not get covered under audit risk. This point I have already explained you long ago in the chapter risk assessment and internal control, question number 1. Yes or no? So this is what regarding the impact of sampling risk on test of details. Clear, everyone? So if I tell you entire summary, impact of sampling risk on test of details as well as test of controls. First we will talk about test of controls. Because of sampling risk on the test of controls, 2 impacts could be there. Risk of over reliance, risk of under reliance. Sir, what is risk of over reliance? I am overly relying on internal controls when they are not effective. This will affect my effectiveness of the audit. Efficiency will be there, but effectiveness will not be there. Risk of under reliance, that means I am not relying internal controls when controls are effective. Because of this, what will happen is I will perform more substantive audit procedures when less is required. Here I will be very effective, but it will have an impact on my efficiency. I am spending more amount of time. Next one. When I talk about test of details, it will have impact on test of details in 2 ways. Risk of incorrect acceptance, which means what? On the basis of sample, I am wrongly accepting the fact that financial statements are free from material misstatements when they are actually not. So because of risk of incorrect acceptance, what I will do is I will give unmodified opinion when modified opinion is appropriate. This will lead to audit risk. When I talk about risk of incorrect rejection means what? On the basis of sample, I am rejecting the fact that financial statements are free from material misstatements when in fact they are free from material misstatements. Resultantly, I will give modified opinion when unmodified opinion is appropriate. Will this lead to audit risk? No, this will not lead to audit risk. Understood? So this is what the sampling risk and how it is going to have an impact on my test of controls as well as test of details. Able to understand everybody? So this is what will be there in the answer. I explained it in a detailed manner. You can read it later. You can read it. So I have explained it in a clear manner with the help of examples. Just give a quick reading whenever you get any free time. But important point guys, high chances of getting tested in the examination. Please do mark it. Next. Yeah, so let us see this question. One true or false statements from the study material. Low acceptable sampling risk requires larger sample size. So if you want to reduce your sampling risk, will you go for bigger sample or smaller sample? You are taking bigger sample means what? You are trying to verify more transactions. When you are trying to verify more transactions, are you trying to reduce your risk or not? Obviously. If you are taking smaller sample, that means you are increasing your risk. So what is the question they are asking? If you want low risk, you will go for bigger sample. Obviously. Is the given statement correct? Yes, the given statement is correct. So sampling risk arises from possibility that auditor's conclusion based on sample may be different. So nothing but first they have told the definition of sampling risk. If acceptable sampling risk is low, larger sample size will be needed. Nothing but what justification you should write is first write the meaning of sampling risk, then write the statement if sampling risk has to be low, the sample size has to be bigger. Understood? Now, so since we understood what is sampling risk, let us try to understand what is non-sampling risk. Very simple guys, chumma concept. So what do you mean by non-sampling risk? Non-sampling risk means the risk arising out of other than sampling. Any risk by reason of other than sampling, that we call it as non-sampling risk. First of all, sampling risk means what? Sampling risk means I might give a wrong opinion because of selecting inappropriate sample. That I call it as sampling risk. Any risk other than sampling risk, I call it as non-sampling risk. That means I am giving wrong opinion, but not because of sampling, because of other reason. I'm giving wrong opinion, but not because of sampling, because of any other reason I am giving wrong opinion. That I call it as non-sampling risk. Like for example, this will mainly occur when I'm a lazy fellow. I'm an auditor, but I'm a lazy fellow. For example, I have taken a sample. There are total 10,000 transactions are there in the population. Out of that, I have taken a sample of 500. I have taken a sample of 500. In that 500, there is actually a fraud. In the 500 transactions which I have selected, in my sample, there are transactions which contain fraud also. But I'm a lazy fellow. I did not perform audit procedures on my sample also, and I'm unable to identify the fraud, and I gave an inappropriate opinion. Now tell me, you gave inappropriate opinion because of inappropriate sample? No, in your sample, fraud items are there, but still I am unable to detect it. Why? Because I did not do my work properly. Human errors, unable to perform proper audit procedures, or you are wrongly interpreting the audit evidences. So like this, if your opinion goes wrong by any reason other than sampling, your sample is correct only. You have selected appropriate sample. Misstatements are there in the sample, but still you are unable to identify. Why? Because of human errors. Because you are lazy fellow. You did not analyze the evidence properly. You interpreted the evidences wrongly. That reasons we are going to call it as non-sampling risk. That's it guys. Nothing else to elaborate here. So if you read the answer, the risk that auditor reaches an erroneous conclusion, erroneous means wrong conclusion for any reason not related to sampling risk. That means I am giving inappropriate opinion, but that is not because of selecting wrong sample, because any reason other than sampling. What are the examples of non-sampling risk? It include inappropriate audit procedures. You are performing wrong audit procedures. Misinterpretation of audit evidences. You are not properly using the audit. You are not properly interpreting the evidences. Failure to recognize a misstatement. There is a misstatement. There is a deviation in your sample, but you fail to identify it. Sources of sampling risk. Sir, why sampling risk will occur? Because of human mistakes. Misinterpreting the results. You got evidences, but you are wrongly interpreting it. Applying audit procedures not appropriate. You are performing waste audit procedures, which are not at all suitable. Or relying on erroneous information. You are believing the wrong information. So these are the various reasons because of which auditor's opinion can go wrong by any reason other than sampling. Able to understand everybody? So this is what the meaning of non-sampling risk. Understood everybody? Able to understand? Clear? So this is what relating to non-sampling risk. Now we are actually left with only 3 more questions, 14, 15 and 16. 13, 14, 15, 16. Okay. So question number 13 is there. 13, 14, 15, 16 are there. Those questions we'll try to understand in our next session. That's all for now guys. See you in the next class. Bye everybody. Take care.